Hello, ladies and gentlemen. I also discovered one thing. Our Formula One for trading other synthetic pairs also still work on boom and crash, boom 1000 especially. I mean, so the first one, remember was about 50 EMA. Wow, this has happened. Wow, wow, wow. Amazing. This has happened. So it also works on this. This is super, right? Why do I say so? Because I discovered a thing. Now, the market just spiked and is preparing to this like kind of liquidity area, perhaps if you look at it. Now, why do I say it actually works? So long the market is below the 50 moving average for your scalping on 1000, you are careful, you are not trading. You understand? Now, so remember what we said. So let's take off the moving averages so that you see a plain chart as we rightly mentioned. So I'm going to wrap up all the strategy at a go. Okay. The first strategy was price actions called liquidity and in combinations with MACD or RSI, MACD and moving average. And that has to do with 50 moving average or 50 moving average and 200 moving average. Now, this market has been down. I've told people as a first, you want to go to higher time frame to know the trend of the market. This is a downtrend. Go to 1 hour, 4 hours, you're going to see it's a downtrend. So you don't need to struggle it. It's a downtrend, just that it's getting fascinating. It's getting fascinating to create a bounce if you can do that, right? So, but it's a downtrend. Okay, now, so there are so many conferences that we do when it has to do with market, but I'm not going to go into that detail just to show you how actually this actually work. Or sorry, how it actually works. Okay, so you want to be looking for a trade, as it were, stuff like that. So this is 4 hour time frame. Now, if you go to 1 hour time frame, you still find that it's a downtrend. Okay, it's a downtrend. Okay, so you can see this is a high, this is a low, this is a high, this is a low, this is a high, and then this low does the first major low now. So if you look back, you could see some point here. This is liquidity. Perhaps you can see you sweep this liquidity, and of course attend to this point. But this is the point. Now it's a downtrend, and so if you are scalping on downtrend, you have to be very careful when it has to do with above 1000. So if I go to 15 minutes, you could find perhaps like a kind of sell side, buy side liquidity. But if you look at it, there is none you could find outside this this point. So this is an important level. Where we are, there's an important level. Or else we look at all of these points. So market should be reversing at this point, any area from this point, right? This is 15 minutes. I'm just doing basic market stuff. If you go on 15 minutes, is the same thing. What you do is, first of all, the market where it first stopped here, all right? So that means what you have on this time is this is a low and this is a high. So most times what we want to do is to mark that low and that high, just like that 5 minute. Excuse me. Then wait for the market to come back, sweep the liquidity, return back to the zone. But if you return back to the zone, you need a break above this point. If it hasn't break above this point, you can't take it seriously. That's the truth. Remember, this is boom and crash. As I told you, excuse me. That's why I told us that we were trading boom. You should have some reasonable backup fund so that, but when it give you drawdown, when it's going to pay you the money, it's just going to pay you at a go. Okay. So I can invariably look at my 15 minute now to say, okay, markets will return back to this point. Yeah, you heard me right. So markets will return back to this point, and it doesn't take it the journey it took him down to get to this point, right? Then another point I can look at now is this point. Okay, so I'm just doing that. Then perhaps other point here. So here, if that's the case, now let's go back to 5 minutes, right? So I'm combining all the strategy, Formula 1, Formula 2, and Formula 3. It's just the indicators that are different, okay? but you still need to understand at least basic price action. Like now, so but on Boom 1000, so please trade it on 5 minutes. Some people trade it on 1 minute, fine. But without our formula, trade it on 5 minutes. Okay. Now, this spike that's going to happen subsequently may be very massive, but that should be because if you are going to take an entry here, it's a bit risky, but nevertheless. But this has sweep liquidity, but you need to break the high, and that's only hesitance you are doing so that you will not just jump into the market. So you can see why I say you need reasonable fund. Because if you want to take a risk of jumping in here now, so you're going to look at how many lot so how many so let's say you're jumping in here, you're putting your stop loss here. Come on, that's about 69 points. Yeah, so 69 point, if we do it one standard, that is $69. But if you use maybe 0.2, that's going to be whatever you can calculate it, just 0.2 multiplied by, okay, 0.2 multiplied by 69. It's going to give you the figure you will lose if the market. You can see why you need at least. Most time I can be on drawdown on Boom 1000, Boom 300 for, you know, $70, $80 drawdown. So you see that it's not $50 you should use in trading Boom 1000 or Boom, except you want to be trading 1 minute, and it's a way of other strategy. But I don't think I have that stress at time that could do that. So now you expect the market to spike anytime soon. Now, but the best bet is that the market should be above this point. Now, let's implement all of those strategies. Let's look at the MACD. So if you look at MACD, it's still all right. You can see the MACD. You can see that the MACD, right? Let's go here. You can see that the MACD is still on a downtrend. So you need a crossover, okay? Just like something similar to this that happened here. Something crossover. But because overall trend is still a downtrend, the spike will not be aggressive when it's in an uptrend. Now, so let's take it and put okay, let's put 200 and 250 moving average for us to see, right? You can see it's still the amount. Now, this 50 moving average is still forming like a kind of resistance for it. So you want to see when the resistance is broken, and before you can actually decide. So, but if you take an entry here now, you are just like because maybe you'll see that you are close to a key level that reversals will be happening anytime soon. And that's why you're doing that. But it's a bit risky though, because you can be on a drawdown for a while and eventually lose the money. Okay. So you can imagine somebody too who did that here. Okay. So so let's go. Now, the same thing. So that's just it. You have marked all of this and then look at your indicator. Now that help you know, say, man, this thing is not ready, it's not ripe yet. And so let's look at another instrument, perhaps like Boom 500. I don't trade all of those one. I don't have that time. I have a lot of things doing. So let's look at it. Okay, so this one had actually moved, but not today anyway. Was it today? Oh, yeah. So the movement, so let's say here, this is today around 1 a.m. Nigerian time. Okay, 2 a.m. Nigerian time. West African time. So now, if you look at it, let's take this. I don't too much trade this guy because sometimes it won't give you what you're looking for. So let's say you're looking at this point. So look at by the structure. By the structure, this is like a low, right? So if you take this low now, all right. Now this low, okay. So let's say this low, good. Now this low, you have marked it at a point, market pull up here. There are chances that you probably might have entered here, right? You know why? Okay, you have not entered because the previous low was here. Okay, yeah. So the previous high was here. This is the low. All the aggrandizement didn't take out this one. That's one of the things that will make you not to actually jump in. Okay. So all the aggrandizement will not make you jump in because this high was still there. Now the market came here. You've marked another low. Then So all what it did, you want it to come back to it, spike and take out this, or sweep liquidity. After sweeping the liquidity, you want this market now to return back above this. This is a high. Now you are very, very much interested in whatever want to happen. You get it? This has taken out this high. Now, so next you want a pullback. So most time, if it's normal market, that's not all this spike and all that. You want to have a kind of an imbalance, maybe somewhere here, right? Somewhere here, right? This is an imbalance, right? This is still an imbalance. So now this is an imbalance. The market return back to you. You can see that price action is working in smart money concept. Now this market return back to this and fill it. That's your entry. So you are entering here. Now this is another thing. I think this one to use 0.5 or something. So this is your entry. Maybe because you were waiting when the market come here and all of that, any area here. So your entry is here. So your stop loss can still be as down as this point, 0.5. So 0.5 is the loss size you're using. So this is 37, right? 37. So 37 divided by 0.5. Now if you use one standard, that will be $37 if you come down for the market. So now 1:2 risk reward, let's go there. So you're going to be making $75 if you walk out. Now, but the good thing about this is that if you are using our formula, you probably may not exit, but maybe you open two positions, and then one you set to take profit, second one you don't set to take profit. You come boom and boom, spike massively, and so you can continue. So as long as the market is above the 50 moving average and at the same time 200 moving average, you're still good, right? So that means you can. But sometimes it's always good if you look back. That's why you mark key levels, or uh, what do we call it? You mark sell and buy sell liquidity, so that when you get to a point that is exhausted, you can know. Okay. Now here, this is where I get more. The interesting aspect of it is that so when the market continues to go, I sense this. Is this the same market structure, price action kind of a thing? So market has created a high here. A low, spike and break the high, no problem. A high, a low, a high, low. Now this is the last high. Then the market spike and couldn't hit that point. That's resistance. So the market came back, do another spike, low, that's bad. And then could bounce here, but all of those bands has not gotten here. So that makes sense you taking your profit and wait for another opportunity. Now, so here you come. This is market has come down here. This is a massive spike, but can it sustain to break this? As long as this one is not broken, I'm not taking it serious. Okay, so those are the things you need to learn when it has to do with it. So can I see that it actually work for even boom 300, boom 500? So if let's take boom 600, boom 900, I do not trade all of those ones, right? So I think the same thing to play out. But you're patient because sometimes you will miss some trade or some trade and you want to catch up. It's not good. So you have to be very careful. Don't catch up any moment. Once you lose it, look for another opportunity. Okay. 900, so you can see the right. So the same thing you can set up. Okay. This is a low, high, sweep of liquidity, return back, break it, you are good. Then go back. So this one is a very good one. All right. So you will say, okay, what of this trade I miss? Maybe if you go to your MACD, probably will have find when MACD was actually going. But look at when MACD confirm it that is up when it crosses, and that is it here. Okay. So, but you using your MACD, you probably would have entered depending on what you want to achieve. Okay. All right. So then I think the same thing is applicable for BOOM 300. You can see boom 300 downtrend. Oh, it's about to smoke up, but this happened now, but this has not been broken. So we have a low, we have a high, then a low, and this one broken. That makes sense. So you're looking at possible area of entry here, or totally down here. Okay, so perhaps it's still below 200 moving 50 200 moving average. So you have to be very careful. Okay, so the same thing. So we have 900. Just move 900. Okay, was that the one we checked just now? Yeah, okay, that is it. Okay, okay. 900. Okay, so let's go back to the boom 1000. It's not ready yet because what I told us. All right, can you see? So it can spike any time now, but it's not safe for you jumping in. Though this is sweep of liquidity, makes sense, right? So this actually work perfectly for it. So let's look at the second as our second rule. So we have three rules. So second rule. So if you go and watch Formula One, Formula Two, this I just explained is Formula One. I just paraphrase it. So let's take off this and go to Formula Two. Good, good, and good. So this is Formula 2. You can see the Formula 2 is still the same thing. It's still rejected, okay? So if he has not taken out this, as he has not taken out this, he has not gone above Formula. This is Formula 2. The same thing here. You lose trade here because you jump in so early and thinking that it's going to spike. So it's below this, cannot work. So you have seen, this is very fantastic. So all the formula we explained works for all the instruments we have just explained now here. This trade, I took it this morning, and I think it's on the so it's on the okay. I think I did not come. Okay, I come. Yeah, okay. Yeah, hey, is it good? Oh my God, this is amazing. Yeah, so it first took me out, and I have to refine back. That 1 minute, refine back 1 minute, 3 minutes, 4, 5 minutes, 2 minutes. We're able to get in. And I'll show you how I got in. You're going to see the mark. Okay. So what really happened was that the market, it was the yesterday high, if I'm not mistaken. Okay, this was yesterday high. So I expected yesterday high to be taken, but we're close to that. That is right. That's liquidity range, daily liquidity range. Now, so when that was taken out, that make a lot of sense, right? So make a lot of sense. So I got in something here. So we have market structure shift here. Okay, this is a low, and then this is another high. So this high, this low, sweep of liquidity, both break structure, shift liquidity, and we got this. We got market structure shift. The market came down. Now, I know sometimes you could jump into this. You may make profit if you know what you are doing anyway, but you don't even know how long is it going to go. So the market actually came down. Then what you expect is a pullback back to this fair value gap. Sometimes this fair value gap, there are things you need to understand, right? You could find just back to, there's a strategy called Quasimodo's strategy. In the market, any point here it returns to is part of the entry. And that's the power of this year. If this year your entry is sequential order. Now that confirmed the sell, now you have sold. Now, after the sell, you move up, down very well. If you're scalping it, you'll have taken some profit. And then you move back. If you were the people that set a trade and go away, have to move back, no issue. You probably will have bought again. If you're not the type, you probably just come and see that the market was trailing and then trending till we have, alas, to where we are, and then look at it. Now it's trying to say, okay, I want to find a recovery. You understand? This is a very simple way. Um, of our strategy one, like I did explain. Okay, so go back to, okay, so 5 minutes I say. So you can see this one has moved on. So there's a key level identified here. This is spike. You can see the same thing you're looking for. That has not happened. Continuation for sell. Okay, so this is amazing strategy that work. Give you a lot of money. You can be patient. Then you build up your portfolio as simple as possible. All right. So try the other strategy, the same thing. And then Formula 1, Formula 2, Formula 3 works for Boom 1000. Right. So have a nice time. And you want to, of course, if you not sign up, right? Look at the comment section where you have your the RIV link, register, verify your account. Want to register on WellTrade, the link is still there. Register, verify your account, and let's move together. Thank you very much. My name is Felix. I'm the team leader of Columbia Express. Have a nice time.